Welcome to this week's live ASX strategy session. Thanks for joining me for another show. Great having you with me. Heaps to talk about. We've got all-time highs and rate cuts in the US. We've got the ASX sitting below us all-time highs, new all-time highs in gold. So I think a pretty interesting show, and also looking forward to going through any stock codes you'd like me to have a look at. Get them ready. We'll go through them in the second half of the show. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into this week's first chart. So, starting off with the ASX 200. And well, this has been the largest pullback since the April lows. Is it also about to become the longest pullback? I'll come back to this in a moment. And then, of course, over in the US, the S&P 500 has just hit a new all-time high. And but are there some cracks appearing? I've got some important charts I want to go through with you a little bit later. But before we get to that, just looking at this latest price action in the ASX 200. It all seems quiet on the surface when we just look at the last week, but there's actually quite a lot going on within the market. I think the first point to note is that prices are finding support around the 50-day moving average. And this is important as it's a sign that the dip is being bought. It's when prices cut through. It's when they cut through the moving averages and then start to consolidate below them. That's when they become vulnerable. But at this point, that's not what we have. At this point, we have a market that's consolidating around the 50-day moving average and above the 100-day being the blue one, the blue line being the 100-day moving average. So I think that's positive. I mentioned earlier that this has been the biggest pullback. This has been the largest pullback since the April low. And so far, it comes in at around 3.5%. But it's not the longest consolidation. The longest consolidation was over here in June and July. Prices traded sideways for a touch over 5 weeks. The current consolidation, well, this has only been around 4 weeks. We've spoken about the potential for a larger consolidation over the last couple of weeks. The price action we're seeing now, to me, it suggests that there's probably some more consolidation to come. So I think this probably does become the largest consolidation since the low down here in April. Yes, the dip appears to be being bought, as we can see by prices finding support around this 50-day moving average, but we're yet to really see any signs of momentum or of a rebound off the moving averages. So it looks like it's a market that does need to continue catching its breath following that powerful rally that we had off the April low. And like, we've got to remember, it's not often that we see prices move 26% in just a few months. And when they do, well, consolidations typically follow. Nothing unusual about that. It's interesting to look at a weekly chart of the ASX 200. So let me just jump over here. I'm going to turn this into a weekly. When we look at this on a weekly and also put on an RSI, let me go to my indicators and I'm going to find the RSI, the Relative Strength Index. So that's going to appear down here, down in the bottom section of the chart. Let me just compress this a little bit so we can get a bit more information. So what's interesting here? So the RSI has recently been above 70 and it's reversed. And what's interesting is when we go through and we look at the previous times when that condition has played out, where it's been above the moving average and then, not above the moving average, sorry, above above 70, above an RSI reading of 70, and then reverse. And you can see this has happened. Doesn't happen that frequently. It's maybe every 3 or 4 years, maybe that situation occurs. So it's not that often that we see prices get up the RSI get up above 70. And what often happens when it does get to 70 and reverses, it often comes back it often comes back to around the middle, comes back down to around 50. And you can see this play out. You can pause this and go through it slower in your own time. But you can see that that condition often resolves in it coming back to 50. So is that going to happen this time? Will the RSI come back towards 50? Now, sometimes the RSI peak leads to a larger correction like we saw in 2021. So you can see prices, or the RSI got above 70, started to reverse, and then that led to this longer corrective phase that took quite a while for the market to work through. Yes, it came back to 50, and then it continued to take its time to work through. But then there are other times where it's more of a pause before higher levels. So, say for example, this one over here in 2013. So it reversed, came back down to 50, but look at this. This is more just a consolidation back to the 50-day or the 50-week moving average before higher levels. I don't think the market is currently on the cusp of a 2021 style period. That's not what I'm seeing when I look at the global markets or the components of the ASX, like the small ords or the emerging companies, which we'll look at in a little bit. But I think if this pattern were to repeat, where the RSI gets above 70 and then comes back down towards 50, I think if that were to repeat and that plays out again, well, I think that plays into the potential for the current consolidation extending for several weeks. And we do a little bit more work up around current levels. So let's just bring this back to the daily chart. And I think also worth doing, also worth having a quick look at the equal weight, the ASX 200 equal weight index this week, and so it continues to outperform, the ASX 200. So the equal weight actually hit a new all-time high this week. You can just see it actually hit it today as well. So earlier in the week and then today it's hit that new all-time high. Of course, that's not what we're seeing in the ASX 200. And the equal weight is it's also staying above its 50-day moving average, where, of course, the ASX 200, as we discussed, it's come back and it's consolidating on its moving average. I think the relative strength of the equal weight shows that the broader market, I think, is holding up well. And as we often discuss, a stronger, broader market is often a key factor in a sustainable bullish market. I think there's room for the equal weight to pause over the next few weeks. Pause and consolidate. For example, we could see several weeks of sideways chop while the 50-day moving average catches up. But until we see clear signs to the contrary, I think the base case should be that this remains a bullish trend. Rising moving averages, price above moving averages. That's a bullish trend. I think the play here, so just coming back to the ASX 200, I think the play here, it's remaining positioned with this overall bullish trend. The moving averages are trending higher, and the broader market is showing strength. So for me, that means staying with the ASX 200 index. So I'm positioned in the index. I'm positioned in individual stocks. But as always, having that exit strategy for when conditions change. And as you'll probably know, this means for me, it's using those wide trailing stops. I want to be able to see off. These consolidations when they occur and stay on the broader trend. I want to give the bullish trend the benefit of the doubt for basically as long as possible. And that's because that's where the money's made. The money's made through these big upward phases, but then always having that line in the sand where it comes time to protecting capital. Now, we're going to jump to the US market now. If you're getting some value from this, so please hit that like button, leave us your comment. Hey, thanks for the video. Tell me what you think. Do you think the ASX 200 is going to consolidate more or make a new high in the near term? Tell me what you think is going on. And doing those things actually helps me a lot, because then YouTube shows other people and it makes the whole thing work. People need to watch for this to work. So please do those things. All right, so let's jump over to the S&P 500. And, well, it's been another all-time high for the S&P 500, an all-time high on Thursday. But more impressive, but I think more impressive has than what we're seeing in the big caps is what we're seeing in the small caps, and I'm going to get to them a little bit later on. But first of all, focusing on what's going on here in the S&P 500. So prices continue to rally above the 50 and above the 100-day moving averages. And as we've talked about for some time now, that clear sequence of rising lows, rising highs. And when those conditions are present, well, you've got that classic bullish structure. We're seeing the same setup or the same structure in the Dow and in the Nasdaq, and so it really is a strong upward trend for US stocks generally. I think the problem a lot of people have in these situations is that they start to worry about when is it all going to end. They see the big rally and they go, "Well, look, has it gone far enough?" And when's it all going to wrap up? And we know at some point prices will correct lower. Like that's a given. That is going to happen at some point. But there's just no way to know when that's going to be. So I think the potential for consolidation, like it's always there, all the way up. That potential for consolidation is there, and it's been a big rally. There's no doubt about it, and there's only been short pauses along the way. But these big momentum moves, they can persist for longer than most people believe possible. And this one here is a case in point. People were thinking this had run its course back in May, and we're talking about taking profits after the initial rise. So these big moves, they can go for quite some time. Who knows about this one? But the trend's in place until it isn't. So I think the best play is to go with them. Yes, definitely manage risk. Don't get overconfident, and also, though, don't try and pinpoint tops. People trying to pinpoint tops, they've been missing out. At some point, you get the top, but I find the money's made by staying with trends, not trying to get off early. It's interesting to look at the internal strength of the market. So, firstly, the S&P 500, its internal strength. So, I'm going to jump to an indicator. Now, this one here, we haven't looked at this for a while. This shows the percentage of S&P 500 stocks above their 100-day moving average. And when you look at where this currently is, it's currently showing that 61% of S&P 500 stocks, so 61% of the biggest stocks, are above their 100-day moving average. So that's it's down. It's down from 76% a few weeks ago, but it's still good. It's still positive. It's still strong. And I think there's scope for this indicator to move higher in the coming weeks. Maybe this is a consolidation before it regains momentum and we see more strength in the indicator. But that's not the point I want to make now. So just noting this, 61% of S&P 500 stocks above their 100-day moving average. Now I want to contrast that to what's happening in the Russell 3000. So don't confuse this with the Russell 2000, which is the small caps. This is the Russell 3000 we're going to look at. And the Russell 3000 is, it's the largest 3,000 stocks. And this indicator is showing the percentage of Russell 3000 stocks above their 100-day moving average. And the Russell 3000, it covers about 96% of the US stock universe. So it's probably the broadest measure we can look at for this type of thing. So what's interesting with this is that currently 70% of the broader market is above their 100-day moving averages. That's compared to 61% for the S&P 500. The pullback from the recent peak is also shallower than we've seen in the S&P 500. So I think that what this shows is that the broader market is in good shape and that the small to mid caps are actually doing quite well and better than some of those bigger S&P 500 names. So 70% of the broader market above 100-day moving averages. And I think this is happening behind the scenes. I don't think most people would be aware of this. So I don't think this is a speculative craze that we're currently in with the market rallying. I don't think I don't think this is like a speculative boom by any stretch, because a lot of people be unaware of those sort of stats that we just went through. I think this is a classic wall of worry bull market taking stocks higher. So you might right. Another thing I wanted to mention, you might remember that I told you about some really interesting statistics a few weeks ago, and that was around rate cuts. It was about what's happened in the past when the Fed cuts rates when the S&P 500 is within 2% of an all-time high. So the data went back to 1980, and there were 22 occasions, and in every one, the market was higher. 12 months later, the median gain was 9.8%. And guess what just happened? Of course, the Fed cut rates this week, and the market was at an all-time high. So, of course, history might not repeat, and stocks also don't move higher in a straight line. So some of those 22 previous occasions had large pullbacks within the 12 months as they head to a gain like 12 months later. But history does suggest that stocks could have a positive undercurrent over the next year. So it's something to keep in mind. So could there be a pullback in the near term? Well, of course there could. Pullbacks are a part of every rising trend. But rather than trying to sidestep the next pullback, I'm going to try and see it off by using wide trailing stops on my individual stocks. That typically means trailing stops below the 100-day moving average. Until I've got good reason to do otherwise, I want to stay with this trend. That's what's been working for me the whole way up, and so I want to stay on it for as long as possible. See off the pullbacks for as long as I can. All right, so let's move on to the small caps now. Then we've got the US small caps, Aussie small caps. We've got all the commodities to go through. I'll show you a stock I bought through the week. So there's lots of interesting stuff there. And of course, your ticket codes, get them ready. We're going to go through those. But as always, that wraps up the free section. If you're not a strategy session member, costs you very little money. Come in, click the link below, join up, and get today's replay. Get tomorrow, next week's full live session. And it'd be great to have you with the sessions. All right, so let's start. Let's start with the Russell 2000.